If you're relocating to Dallas as a physician and you've been told, wait until you start the job, pay down your student loans first, you'll need 20% down on a $1.5 million home, stop. Because depending on how your contract is structured, you may qualify using future income. You may not need a large deposit, and your student loans may not affect the way you think if the loan is structured correctly. My name is Ray Valentine, relocating physicians across Dallas, Frisco, Prosper, and Plano, especially those transitioning from residency or fellowship into attending roles. And here's what most doctors don't realize. In today's market, your employment contract can be more powerful than your current income. Not every lender understands how to use that properly. Your attending contract is more powerful than your current income. If structured correctly, it can qualify you before you ever receive your first paycheck. Now let's talk about future income. Under the medical professional program that we offer here, you may qualify using an employment contract with a start date within 150 days. That means you don't need 2 years of attending income. You don't need to pay stubs from your new job, or you don't need to delay your home purchase unnecessarily. For residents and fellows transitioning into significantly higher compensation, this changes everything. Because your qualifying income is based on where you're going, not where you've been. Now, let's address the elephant in the room, student loans. Many physicians assume their medical student loans automatically destroy their debt-to-income ratio. That's not always true. Under our program, when using residency or fellowship income to qualify, student loan payments may not be required to calculate qualifications in certain scenarios. That distinction is very, very critical. It doesn't mean student loans disappear, it just means that the structure can shift depending on how you're qualifying. And when you're carrying a $300,000 to $500,000 in student loans, that structure determines how much you can purchase. Most physicians don't struggle with income, they struggle with timing and student debt assumptions. When you understand how this program calculates those liabilities, your buying power can look very different. Now let's talk about the headline feature. Up to $2 million loan amount, up to 100% loan to value, no mortgage insurance. That sounds aggressive, but here's the nuance. This program is specifically designed for medical professionals. It's for your primary residence only on a 1-unit property with a minimum credit score of 680 and a DTI flexible up to 50%. Now, should you actually use 100% financing? This is where strategy matters. Just because you can put zero down doesn't mean you should. High-income physicians often benefit from preserving cash for emergency reserves, investment opportunities, practice buy-ins, relocation costs. Sophisticated borrowers evaluate, is my money better deployed somewhere else? Sometimes yes, sometimes no. That's not a loan question. That's a capital allocation decision. Now, if you're a 1099 contract, the program may allow qualification depending on start date timing. That's huge for certain specialties. Additionally, non-occupant co-borrowers may be allowed with contribution limits. Again, a structure of the loan, not an assumption. Now, top producing agents in Dallas understand this. Relocating physicians are strong borrowers, but they require lender precision because future income files require clean documentation, clean contracts, and clean underwriting. A generic pre-approval won't cut it on a $1.8 million offer here in Frisco. Execution strength matters, and that strength starts before the offer is written. Now let's bust some myths here. Myth number 1, I have to wait until I start working. Not necessarily. Myth number 2, my student loans make me unqualified. Not automatically. Myth number 3, zero down is risky. Look, risk not defined by down payment alone. Risk is defined by income stability, credit strength, and your profile, and of course, proper underwriting. Physicians often score very strong in those categories. If you're moving to Dallas as a physician, the most important thing you can do is structure your financing before you shop seriously, not after. I invite you to a free strategy call where we'll cover your contract, your student loan profile, the down payment scenarios, and your reserve requirements. We can determine whether this medical professional program is the right program for you, or if a different loan program gives you more flexibility long term. Because once you're under contract, leverage decreases. Before contract, you control the situation. If you're a physician relocating to Dallas, Frisco, Plano, or Prosper, schedule a confidential strategy session and we'll determine whether 100% financing, partial down, or these jumbo loan programs is the best program for you. No pressure, just clarity. And if you're a real estate agent working with relocation medical professionals and you want clean execution on future income files, I'm always open to help you. Because in Dallas, structure wins and your contract makes you more powerful than you think. Thanks for watching, and thank you for joining this incredible medical industry. God knows we need you, and I'm truly grateful for your service.